The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, every market day, 11 o'clock till noon, 877-927-6648. Just as you heard, love to take your calls. Great day for it. Why? We're getting close to some kind of, at least a short-term top. I think we've got about another 5 days or so, 6 days maybe. Oh, that's right. I'm going to keep facing this way. 5 or 6 days. Thank you, Steve, for 2 great hours. Let's just go straight into the picture. The Dow's down 12 at 16,194. S&P's down 1 1/4 at 1846. Now, this is going to be very interesting because you've got the comp index down just a fraction at 42.92. Let me just tell you, Tesla is having a nice day today. It's only up a mere 29.51 at 247. Isn't this interesting? Every single hour up until now, you could have bought Tesla at any stage in the last many months, years. And at this particular point, you'd be up. And it's in leg C in the daily, leg C in the 120-minute chart, leg E/B in the weekly chart, and leg G/C must have recycled, and it looks like it could be C in the monthly chart. You remember Apple was like this. There are stocks that are they're cult stocks. You can't get technical. You can't start thinking too much about them. You just buy them because they are the stock du jour. And that stock du jour can last quite a while. That's what's happening with Tesla. It's just, it's on a roll. When it comes down, it'll come down sharp. But when it really comes down for a big timeout, that'll have to be with some really bad news that hits it. Right now, it is the I Omega, as Pete D in the den says, the I Omega of right now. And anyone remember I Omega? It was just unbelievable. I remember when it was at 22. I had a client who was just an outstanding short. I said, I've got a very short-term sell, but it's making a peak D. If it makes a new high, I think it could go higher. What peak D? What do you? He just wasn't interested. Well, the next thing it was 44, and then it was 66. It was an unbelievable stock. And meantime, back at the ranch, Tesla, I would have to put into the category of something a little bit different. Why? Because there is substance to Tesla. They are producing one of the absolutely top-rated cars. Actually, I was in the Natick Mall just the other day, and they have the Tesla store there. They're not allowed to buy and sell in that store, but they can show it. They have just down here in Watertown. They've got one of their. I'm not sure if that's where they do the testing or that's where they service the cars. But anyway, I looked. I didn't have a chance to go into the to sit down and look at the Tesla, but I think this must have been one of the new models because there was a very big improvement in that whole front end. You remember I was saying when you see Tesla on the road, especially the dark colors, it's not that you see something like let's skip the Ferrari, but if you see an Aston Martin or you see, I'm thinking of the Maserati, you can just identify them right away. This Tesla was a little anonymous in the very dark colors. The white ones were very nice. I think because it allowed certain features to stand out. This one was in white, but it was really beautiful. And I didn't look at the back because the back to me was also very plain. Maybe it's the S model that's different. I'm not sure, but it was really beautiful. So anyway, back at the ranch, let's go to the numbers. You've got the Dow down 5 at 16,202. You've got the S&P, interesting, unchanged at 1847. I'm swinging around to different monitors. The comp index is up at 42.95. Now, gold is back to the up position. It was almost, well, it was down about $2 or $3 earlier on, acting beautifully. Gold holding very well, 1341, up 360. Silver's down, just a little down, 11 cents at 21.95. Platinum's up 5 at 1443. Platinum's been acting very well, but we've got copper down at 325, so it's gone down below the 328 level. I'm not happy with copper's action. Crude oil is down at $1.21 at 101. Now bonds are up 11.30 seconds at 125 and 26.30 seconds. I'm sorry, I keep looking at the TY. It's the US H that is up 24.30 seconds at 133 and 19.30 seconds. So I wanted to just show you that the TLT has been holding above the 105s very nicely, starting in for its second part of the H pattern that I was talking about. There it is. I'll draw it in right there. And that was the weekly that I showed you, but it's doing the same thing in the daily. Daily says that at 107.83, the 200-period moving average will be touched for the first time since the end of January. And that would be very important because it will start to definitely impact the weekly chart more positively. So I'm going to be watching this real closely. I'm suspecting that we're going to have a mixed market over the next few days with the market making new recovery highs, the Dow making a new, getting close to an all-time high. I'm not sure it's going to actually get there. And most importantly, let's do this. I want to take a look. I wrote a whole bunch of things down here for today. Oh, Wednesday. Thank goodness I was supposed to do it yesterday. Today, Wednesday, talk about the Wednesday. Today's Tuesday, and I'm talking about the Wednesday meetup. The Investors Business Daily meetup changed to the Boston Investors Group. I've been a guest speaker there for just a number of years. And once again, I'm going to be the guest speaker. This is at MIT. I wrote it down. I'll get it during the break, but it's going to be over at MIT, and it is in room. I should have all the details right in front of me, and I don't. I'm going to do this, if you don't mind. Give me 1 second. I'm going to hit that button. That button's going to pick up a bunch of things. And that's going to pick it up right there. It's going to say, Boston Investors Group meeting, MIT building, E51, room 335, Wednesday, February the 26th, starts at 7 o'clock. Most importantly, if you're you've never been there, if it's still daylight when you're driving along, might be a bit dark. But you go down Memorial Drive East, and on the left, on the right, you've got the river, beautiful Charles River. This is the most beautiful view of Boston. This is where you really want to have your condo looking over to look at the beautiful view of Boston on the other side, but there aren't. There's only MIT over there. So what you want to do is to go east towards Boston, turn left on Wadsworth, and then left again on Amherst Street. And it's room 335. And it is on the third floor, and there are usually signs at the bottom, on the bottom level as you go to the elevator. I believe this is part of the Tang Center for Management of Education, and I'm really looking forward to it. I always look forward to it. And one of the reasons is, although there are a number of technicians there, and certainly I love seeing all you Tigers, and please come up and say hi to me. Most importantly, and this is the part that I love, is that there are a lot of fundamental or Investors Business Daily type students of Investors Business Daily, but people have their own methodology. So it's possible for me to even have people that don't do very much in the way of technical analysis at the same time have people who are just monster technicians. So it's really challenging in that I like to accommodate everybody. And they're nice, easy ways to do that. One of the ways is to show them the way that I go about the methodology in the Chapman wave in its simplest form, and that's what we tend to do, and that's one of the fun things about it. For instance, I'll be showing this chart here, which I always show. It is the Dow chart, daily chart, and I'll show where we are, why this is peak C, and that we need to break above 16,300, 0.04. If you go to 0.04 today or 05, that continues leg C. If we're under it, it makes peak C. Look at that beautiful trend line. I'll show you all the things that I'm looking at, why I anticipate we are going higher into next week. Okay, let's go to Travis in St. Louis. Hi, Travis. How are you?
Excellent. Good morning.
Good morning. You'd like to look at?
Let's touch base on BlackBerry. I sent you that email yesterday morning, and I appreciate you covering it in your first couple segments yesterday.
And thank goodness I did, because how timely that was, Travis. I think you just hit on a beautiful thing. You were talking, folks, we were talking yesterday. I mentioned an email that came to me by Travis. It was about BlackBerry. BlackBerry's been it's never really been on my radar. I didn't use it. I didn't understand it. Even as a chart pattern, I just kept missing it. And then it was down bottoms, and back in December, I'd mentioned that one of our tigers came to visit me, and we always talk technical analysis, and he said in his methodology, he's got BlackBerry, BBRY, as a buy. And I said, BlackBerry? I know that their technology, they've got all the rights to their technology, but why? And I looked at it and I said, you know what? I think you've got something. Well, it went just a tad lower into, in December, it went down to 544, and then it started to move up. So this was around about mid-December. Let's just say it was around about the 27th. I can't remember exactly, but let's just say 27th of December, 28th. And it was down in the mid-sevens. And I looked at it and I said, I think you have something here. It's trying to get to the 200-period moving average for the first time. So along comes this, second time actually that Travis has spoken about BBRY. And then he mentioned yesterday that it looks very good and looks as if there could be a move to the upside. Lo and behold, today it breaks to a new recovery high above peak E at 1085. I have to consider I have to first of all call it leg B. In blue, because it's breaking out. But at the same time, I have to say there's a possibility that it's making a cup formation, and it is an F/B. Then I look at the weekly chart and say, no way, this is a brand new leg C in the weekly chart. I look at the monthly chart and say, hey, even that's improving. So first of all, congratulations, Travis. Good eye. And I think that you're really, in your own way, with your own technique, and using your own fundamentals together with the technicals, I think you pretty much nailed that BlackBerry is in play. And that really, both you and Fred have identified BlackBerry as not being dead. It's not a blueberry or anything. It is really active, and it's, in a way, it's come alive in a different form. So as a pure technician, I'm saying, this break in the weekly chart above both the trend line that I had drawn yesterday and above the high of the week of the 24th of January at 1085, it doesn't even have to close there. Either way, it's a leg C. Even if it fails, it's leg C. And at this particular point, the stochastic is improving. MACD is very strong in the weekly. Even the MACD in the monthly has been very, very strong. It's one of the reasons when Fred mentioned it to me, I said, I must keep an eye. And unfortunately, all I did was keep an eye on it. Well, I spent a lot of time, Travis, yesterday, I don't know if you heard this, talking about the H pattern.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pazavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back, and the Dow is now up 32. S&P's up 4. I have to tell you something. The buying is coming in. It's like the ocean waves. The tide is coming in, and those waves keep coming a little higher and a little higher and a little higher. And until the tide changes, and I don't yet see the tide changing, I don't really want to go short. For those of you going short, if you've got the sectors, you've got everything set up, that's fine. I don't think there's a problem there. But I would just say be a little careful because there's volatility here going into next week. And there's a chance the Dow might not make its all-time high. There's a chance that it might just zip right through it. I don't know yet. All I can say is that the amount of buying coming in is just ferocious. So, and the VIX rallied, and then it pulled back. What's the VIX right now? 13.94. It was up in the 14s. That's all I can say. All right, let's go back. We've got Travis in St. Louis. Travis, you still there?
Yes, I am.
Okay, now I'm going to give you a chance to talk. Tell me about BlackBerry.
Well, I'm sold that they're absolutely a turnaround story. I love the new CEO. So fundamentally, I love the story completely. But technically, it lined up with what I was looking at as well. And yesterday, short term, I was thinking that it may pop up to that 1085, which is done this morning. So instead of actually buying loads of stock, I've actually bought some weekly calls on it yesterday at the 10 strike. And those were like 18 or 19 cents yesterday. Well, I sold half of them this morning for 85 cents a few minutes ago. Woohoo! And so I still got half of them, and I'm kind of thinking this thing may run towards about 11.25, 11.50 this week. Well, but I wanted to get your thoughts.
In the 120-minute chart, it's in leg D. But you've also got, I don't have to tell you this, but you know that whenever I see the cup formation, And let me just go back to the daily chart. The couple of folks, if you're looking at Tiger TV, usually, I should say almost always, the left side chart over here is the daily chart with my Chapman wave notation. The middle one is the weekly, and the right one is the monthly chart. And you can see that BlackBerry was I used to have this all notated. I'll just do it quickly right now. A, B, C, D, made a peaky top right there. Once upon a time, it was in the 140s. It was the rigger. It was it. I mean, people loved that it had a little keyboard. 148.13 was the high in June of 2008. Had a little problem. It came pulling back and pulled back, and it went all the way down to 661, 622, 621. September of 2012, China rally went, I think, up to about 18 or something. Went up to 617 in February of 2013, and then the most recent test was really, that stank. That was really a tough road to hoe, to see a stock that was once so good down the 540 area. So I would say to you that as a turnaround company, the monthly is saying there's a double bottom in place to see some real turnaround potential. You want to see this thing close above 12.18 on a monthly basis. And that's number one. Number two is, in the shorter term, the trend line that it's trying to get through today, and it's got through intra-week, but you've still got 3.5 days to go. I want to see a close. It doesn't matter that it went above 10.85. That was the high of the 24th of the week of the 24th of January in the weekly chart to make C, but to have really good technical action. I know that I would like to see it close above 1085. I'd prefer like to see it on Friday, having maybe on Thursday hit 11 something. Friday it could pull back. So what I'm going to recommend to you. You've already taken some fantastic gains. You're playing with the house's money. But there are three things that I would look at in the option arena. First of all, if the MACD is able in the daily to actually close by today or Tuesday, to close positive, and the stochastic can get to about 48 to somewhere between 48 to 52%, that'll be very good action to suggest that it's most likely leg A and now leg B rather than F. If there's a turnaround and it pulls back underneath today's low of 1025, it's going to say, uh-oh, this is just news-related, and it's going to stall a little bit, and then most of the news is out. From the action I'm looking at right now, especially on the 120-minute chart, it looks like there's more buying to come as long as it holds above 1055 to 1050 today.
Okay, and I'll also say, Basil, the short interest in this stock is well over 30%.
I heard it was very high. I didn't know it was as high as that. So I think
it could really start gapping around, I think.
That's right. So you can gap around. And number two is I would take profits and use pullback, nibble on some calls, and just keep taking.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and I don't even remember now if I still have Travis on. Travis, you there? I think Travis is gone because we are wrapped up, and you've done a great job with those calls. Good switching positions there. We'll see whether or not BlackBerry is going to be a turnaround situation, but it doesn't matter. You just want to profit from what's happening right now. And excuse me, Dow's up 37, S&P's up 4.25. This is what I've been looking at. Let me explain. Let me just go to we are long the SPXL. What is the SPXL? It is the direction daily S&P 500 bull 3-time shares. And I had a couple of questions. Let me go over to that computer. I'll get to those questions in a second. What was very important in this particular entry point was the similarity between the powerful green candles. And look how many red candles there have been since the bottom of February the 5th. There have been mostly not just green candles, but humongous. Look at the size of these guys. Look at this. I mean, we are talking football players here. Look at that. Huge. And then you get this tiny little doji candle, and then a little red, a little red candle, another red candle. Today's red candle has turned into a green candle. Days young, we could reverse again. But the SPXL and the SPX and the SPY are only in leg B. And the stochastics at 89% and the MACD's good. When I've been looking at this, I keep saying to myself, it has all the characteristics of a major turnaround in these candles. And that should take me, even with the Chapman Wave squash that I talked about with my subscribers, should take you to at least a peak C, and then you can get some kind of a pullback. Well, so it's more like this in the Dow. Look, the Dow, there's that squash right there. And what you do is you've got a nice, powerful C. And then what happens sometimes is that you can take a little more time as you get your B and as you get your D. But the Dow has tremendous resistance at that trend line right there. Whereas the SPXL is saying, oh no, what resistance? I'm at all-time highs. Well, I was at all-time highs just yesterday. And the SPY is the same. We're going to go to our next caller right away. Got the SPY. I don't know how to call it. Is this leg A? Does that mean we don't even get a pullback in early March? We have to wait for leg D? All I can say is I cannot fight that. I have to go with it. I'm looking at my little scoreboard here, and we've got two stocks that are up 1.87% right now. This is on the day. And I just like that. I'm just trying to find, I'm looking at the IBB. I'm not prepared to go short yet, the IBB. Not yet. It looked ugly earlier on. Said to myself, just hold on a minute. It's like the weather in Boston. Hold on a minute. You'll see a change. Let's go to Robert in Chicago. Hi, Robert. How are you?
Hi, Basil. How are you?
Very well, thank you.
So I want to look at ticker symbol WFM, Whole Foods Market.
Whole Foods Market. Great candle today, trying to fill the gap. Now, let me ask you, this is something that you've held before. I don't know if you have anything at this particular point.
I'm sorry. So I would want to go. Yes, I have, and I've been successful with it before. And I would want to enter here, and my target would be its high. Can it go back to its high towards 65?
I'm going to make. I normally would not do this. You know that I'd always be a little bit careful here, especially when there's a gap. I'm looking at this as the word flashed by my mind. I'm looking at this as the welcome back. Yeah, it's the welcome back market right now. So fund managers are grabbing all the stuff that's worked before, all those biotech stocks, the ones that have been successful, all the stocks like Tesla. You've got Whole Foods rallying from the most recent low of 51, was it? 50.32 on the 13th of February is now at 53.87. It's only 3.5 points off its low, and it's going to have a little resistance at the 54.12 level. Can I make a suggestion about this? Because I think that Whole Foods has made a monthly, weekly, and a daily hat-trick top. But that's not to say that there could be a nice counter-trend rally of about another 4. Let's see, the high was 65, 58 or 59. 65.59. So let me do this. Give me 1 second. 65.59 is trading right now at 53. I don't see why this shouldn't go back to retest the most recent failure where it gapped down. In fact, we had been talking about this, I remember, as a potential short. But at 56.42 on the 12th, boom, bad news. I think that was earnings, and it comes out, gaps down, and now it's trying to fill it. I love stocks that not only try to fill a gap, but they show powerful, powerful bars. And then what they do is if they fill the gap, they break above the most important high that was most recently made before the gap, and that would be 56.42. I don't know if it's going to do that, but at least until Monday, that's the chance where I start to see if there are going to be some sell signals coming in. I'm going to say to you, and I know that you watch this closely, I'm going to say start a small position right here at 53.78. It's back in favor, at least for this moment. Let it go wherever it wants. All you need to do, this is the candle that I was looking at. In fact, I meant to spend a little time on this, completely forgot about it again until right this moment. And it's the candle. Oh, this is nice to see. Now I've got the cough. Hold on. There we are. It's the candle of the week of the 14th of February, 3 weeks ago. That had a high of 56.42. That's the week of the gap. That's the week of the bad news. But it went down to 50.32. And now that rectangle says, I can work my way higher. And if I pass the body of that candle with a high of 54.52, and it's at 53.75, I can start to fill in the wick. And all I would do is I'd say to you, start a position here. I'd have a trading stop. I would give it a point and a quarter. At this particular stage, I would say that it probably won't drop more than 75 cents before trying to get to 54.12, which is the 200-period moving average. So I would have a trading stop, and I would just keep that trading stop. And I'd say, let it go, let it move, let it push higher. And if it gets anywhere to the bottom of the candle of 55.22, that's the candle of the 22nd, of the 12th of February, that's 55.22, that's 1 3/4 points away. If it gets there, I would either tighten up the stop, I'd either take my money, it wouldn't be much, but at least it's money, or I would say, you know what, if it's acting very well, I'd let it ride, and maybe I would tighten up the stop and let it tell you. I'd have a small position, buy it right here at 53.75 with a about a 1 point stop. I'd even tighten the stop if it closes above today's high already of 53.88. If it goes above that, I tighten up the stop to maybe 75 cents. $1's fine, because you're using a trading stop. So I'd keep that trading stop of $1. I'd let it climb, and the whole reason I'm saying that is because it was an out of favor stock for quite a while. Well, it was the stock in favor, but as it's come down, especially since the bad news, if it's doing this well, having not taken out the low bar of the 13th, that 50.32, having not taken it out, in fact, using it as a springboard to move higher, this Roman candle, I like it. 54.12 is the 200-period moving average in the 120-minute chart. I've never seen that. It's also the 200-period moving average in the daily chart. I've never seen them exact. And that says moving about 54.12 would be very good. It'll suggest strongly that it's going to go step by step and try to fill the gap. But I would keep a tight stop. And my biggest contention with stocks like this is that when you see big, ugly candles, as it has almost every fourth or fifth week, you got to expect that that's going to happen again. That's why a small position, treat it as a trade, take some money off. It's been good to you before, and I would even start to consider shorting it sometime, maybe next week.
At what price would you like to short it?
I would love to short it if it starts to fail under 56. If it just cannot get to the new high, and I'm getting a sell signal in my daily and weekly of the Dow and the S&P in leg D or E, it'll probably be E in the Dow, then I'd say, okay, everybody's going to be a little careful right now because we could be pulling back, and I'll be watching many of the other sectors as well.
Great, Basil. Thank you very much.
And thank you so much for calling. And don't forget, there's another thing I'm going to mention, a rectangle formation that's formed in the weekly chart with that big candle, the long-legged candle, that actually can last a lot longer than your patience. So that's why I'm saying start a position here, and let's see where it goes. And you've got a nice tight stop. And if it gets a point higher than where you bought it, you've got a break-even trade. Later on, I'm anticipating Whole Foods will gap down, but I'm expecting that more likely in maybe late March, April.
Thank you, Basil.
Thank you so much for calling, Robert, and good eye. Thank you for calling. So, folks, Dow's up 28, S&P's up 3.21. Here's the other thing I wanted to talk about. WDAY. There are stocks that just strike me as being perfect for buying. And yet, for some reason, you get busy, something happens, and you just never buy them. And the next thing you know, they're doing absolutely fantastically. Well, WDAY is a cloud-based Workday Inc. It does human I guess financial management, kind of a vendor, a software vendor. Must be a great company. They've got leg E in the monthly. That says to me, okay, I love the stock. I think on-demand, cloud-based. I don't know if did I spell it? Oh, cloud doesn't have an E at the end. Excuse me. Very strong leg E. I don't see anything technically in the monthly chart because it's so fresh. But the weekly chart is in leg C. I try to count this. I say to myself, look at that high of the week of the 29th of November at 83.60. If the high of the 27th, the week of the 27th of December, since this is a weekly chart, went to 83.61 instead of 83.45, this would be so easy. I'd be in leg D now. I'd be able to say, okay, I want to be careful. But it's in leg C, and the MACD is good. Stochastics at 91% in the weekly. And I'm looking at this, and I'm getting real close to E. It's already leg E, I think, in the daily. And the weekly is pulled back from a peak E before, having made a major low, recent low in November the 20th. I'm looking at this, and I'm saying, is this going to be another time that it's on my list and I'm not going to get it? Well, that's the way it looks. There are some stocks you just have to say, in my technique, this is a bit too risky. Even though the stochastics at 91%, the MACD is good. I could do it as a quick trade. I would like to be able to buy this on a pretty darn good pullback. And what I'm going to do, and I do this sometimes, and then I forget to look, I'm going to turn the pages of my notebook, turn it to a whole bunch. I'll turn it to way into what should be in March sometime. And I'm going to put down buy WDAY. And let's see what happens. I have no idea what date that'll be because I'll have to get there. We'll see what happens. So I just wanted to mention, and there's that exact candle that I was looking at in Whole Foods. Today, we're making exactly the same candle, and it says trading range rectangle. It could go a little higher, but it's going to come back and test that middle part of the 89s and it's trading, 99s. It's trading at 99.30. So it'll be back even if it goes above the high of today, 102.26. It even says if it pulls back, it'll have one test of the 99s just to say, hey, you remember me? And then maybe come down. But that weekly chart, that's a good chart. So do you start a position here and then add to it? I don't know. Let's go to Dan in North Reading. Hi, Dan. How are you?
Very well, Basil. How are you?
I'm well, thank you.
That's great. Thank you very much for all the information you provide everybody. It's an amazing
it's my
service.
pleasure. You know, here at TFNN, we all love doing this, and I think we just try to give it the best we can every time we're here. So,
Absolutely.
Dan, you'd like to look at?
GTAT.
So this is GT Advanced Technologies, Inc. Looks to me like this is another one of those cult stocks.
These guys are a sapphire glass maker for Apple iPhones.
Sapphire glass. So this is like what do they call that other glass that
Himax
makes?
Himax for Google. That one?
Okay, good. I'm gonna have a look at this. I just have to finish. It's in leg C on the daily. I just want to have a look at it. Give us a chance. We've got a break. Come Gorilla Glass. Thank you. We'll be back with Dan North Reading looking at his another fantastic stuff. GT Advanced Technology, GTAT. Right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back with Dan from North Reading. We're looking at GTAT, but I've also got FEYE at the same time, FireEye Inc. that was asked about in the Den. Same sort of thing. The reason why I wanted to pick it up is because it also has this really quick action. And what I've done with the FEY was show the Chapman Wave leg, body, and here's the breakout, leg D. Very positive, at least for now, but it's a very quick A to B to C to D in the weekly chart. Just wanted to get that out because I know we're going to run out of time. Now we're back to Dan, and we're going to go to GTAT. Do you have a position?
I do.
Okay. So I'm going to make it real easy because you've made it real easy for me. If you have a position, I'm going to suggest that this is, at least for this week, it's kind of a buy and hold, just for now. But what you really want to see, how does it respond to weakness when and if it makes a leg D? At this point, it's leg C in the daily. It's continuously made D's in the daily. Here it's in leg C, so it should go to a D. The weekly chart has got a cup and ladle breakout pattern, and that's very positive. Most importantly, I'm looking at it and I'm saying that weekly chart, I should put E/B, but stochastics at 91%. I have to tell you, I'm looking at certain charts, and they are looking so good that I'm saying, how could we get a sell-off next week when these stocks are only in leg B in the weeklies? Well, I don't know. We'll deal with what we got when we get it. In the meantime, the cup formation in GTAT monthly, having gone from an IPO that was kind of successful because it opened at about 9:30. The low was 9:30. The high was 1882. Had around number 17. I had around number 17 high. Yeah, around number 17 high, and then it plunges. Oh my God! It plunged down to 88 cents. I forgot about that. That's what all that talk was back in 2008. Now I remember that. I remember the talk about that big plunge. Then I forgot it altogether. So it goes A, and then it pulls back and goes A, B, C, D in the monthly, goes to 1750, all-time high, pulls back again, loves these U patterns, goes to 261 in March of 2013. Excuse me. It's making the U pattern again. It's actually a soft W pattern. I love it. It should go to a higher high this time, just like it always does. Higher low, higher high, and get ready. This is they should have used this in the Winter Games. This is just a beautiful, doesn't this look like, what do they call those things? Oh man, they go up and they go down, they go up and they go down. Well, that's what it looks like, the tube or whatever they call it. And now it's going back to the 1750 in the monthly in leg C, so it should still get to a D because it has a habit of going to D. I like it. I think you got yourself a great entry point, but if it's lower than this, number one. Number two is I would consider that if it gets to 1475 if it goes to leg D, and leg D is at 1491 to 1520, that's about the area that I'd say be careful because you can start to see some kind of a pullback in that area. But this is one of those, if you're able to keep a core position and have a trading position, I would take some off in that area once you make your peak D or just as you get into that area, and then I would try to keep the core, and then I would try to put this back on any pullback to about the 1320 to the 1220 area. If it can form a base there, that's when I'd get back in, try to ride it up. I like it. I think you got yourself a great stock, and it's one that's in play. This is obviously in play. It's doing well. Thanks for calling. I appreciate that.
Thank you.
Thank you. Folks, stay tuned. Got a great option show coming up with North, and I'll be back with Tom O'Brien this afternoon, I believe. Have a great day. Oh, don't forget, MIT tomorrow night, 7 o'clock.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.